It's great to be back with you once again on the India Development Debate right here on ET Now, and we're discussing the big bank cleanup and what's really led to this and some of the controversies that plague both the public and the private sector lenders in this country. We'll take it straight across to a stellar panel that's joining us right here. And to take the discussion forward, I've got Swaminathan Iyer, a consulting editor, joining us very shortly. Pradeep Chaudhary, former chairman, SBI, Lord Meghna Desai, Professor Emeritus at the London School of Economics, and Professor T.T. Ram Mohan of the IIM Ahmedabad. So thanks each one of you for being with us. And Professor Desai, if I may start by asking you, so far it was the public sector banks that were really painted as this black hole, as the bad guys of India's banking. The controversy that surrounds two big, large private sector lenders, ICICI and Axis Bank, do you believe in a lot of ways that has exposed the fault lines that exist in the private sector banks as well, eroded the sheen of the private sector lenders?
No, I think these are two very different issues. The ICICI issue is really basically about straightforward, honest conduct. If someone thinks that one of the borrowers is someone connected with them, they have to declare it openly and recuse themselves from any considerations of that loan. I mean, this is nothing to do with public or private. That is just ordinary, straightforward business morality. And I think it's a grave mistake on part of Chanda Kochhar, if she has done it, to not have recused herself from the loan. We will see what the decision is, but that at least looks to be like what's on issue. In the Axis Bank, as far as I can see, what the regulator is unhappy about is an automatic fourth term for the CEO. And I think that is, I don't know what the consideration is there, but again, as far as I know, there is no allegation of misconduct. In the public sector banks, I think there is clearly an issue of how could management sit back and see lending go to these proportions with possibility of gigantic fraud. And so clearly, sort of due diligence was not done, care was not taken to see where the money was going, and I think it's gross negligence. So I think while yes, private banks are bad and public sector banks are bad, I don't think the private sector banks' faults should be used to let the public sector banks off the hook. The amount of damage done by them is enormous. And who is going to bear it? The taxpayer is going to bear it. The depositors are going to bear it. These are very important issues. And I think we are taking them far too lightly.
Fair point indeed. We can't be taking this far too lightly, like Lord Meghna Desai says there. But Pradeep Chaudhary, if I may come to you, and while yes, grave fault lines have been exposed in the private sector bank as well, but can one misstep or two undermine the competence, undermine the achievement of both Chanda Kochhar and Shikha Sharma? They were the poster women of India's banking space, but they were the poster women of Indian industry. Can all of this come down to us harshly questioning their competence, their tenure, and all of this? They were too celebrated till not too long back. So is this one misstep or two, and are we being too harsh? Mr. Chaudhary.
No, I think it is not right to, paint everybody with the same brush. And even in the case of this ICICI Bank and Axis Bank, I'll see them very differently. Now, in ICICI Bank, what is being attributed, of course, I don't know the full facts, that the chairperson or the MD has benefited, her family has benefited from some largesse from one of the large borrowers, which incidentally has become NPA. Now, this is something, in which a person can be deemed to have received personal benefit, or his family has received personal benefit. In case of Axis Bank, I am not too sure what the charges are. Now, in the case, if the charges are that there is huge divergence in provisioning, I think the fault lies clearly at the door of RBI. In spite of the situation emerging, RBI has not cared to lay down the minimum provisioning required for at least 50 or 100 large borrower accounts. That is how it is done globally. And therefore, every bank, and particularly the private banks, are under pressure to show a higher ROI and a higher return to shareholders. So they do what they think is in the interest of that. But RBI should have played the umpire's role and should have said that this is the minimum provisioning in this account you require. You can do more, but this is the least I am going to accept. And why not? Supposing these large steel companies which have come under the hammer, now there are 15, 20 banks and all are having pari passu charge on all fixed assets and current assets. Now how can the provisioning be different for different banks? Some amount of subjectivity is there in provisioning, is inevitable in provisioning, because when you take a patient for operation, somebody will say that the chances of survival are 80%, somebody would say 20%, so there would always be divergence regarding chances of survival. So provisioning is also a bit of that. It's a function of the industry conditions. So Axis Bank case and ICICI Bank case are very different, and in case of Axis Bank, I think they have been attributed that 2 or 3 officials or maybe more officials have been guilty of improper conduct during demonetization. Now in such a big bank, it is impossible to keep check on every individual, but what the bank needs to demonstrate is zero tolerance for such activity. Therefore, I think I would like to separate the two on these issues. Even in the bank, we had to take disciplinary action and award some punishment. Now supposing a person has by mistake credited an amount to a different account, say the account number was 03 and they credited to 30. Now that's a mistake. But if the money has gone to that person's personal account, then the mistake acquires a different connotation. It is not simply a mistake, it is also a question of bona fide or mala fide. I leave it at that and come back later.
No, but just to be right, Mr. Pradeep Chaudhary, I'll come back and address that point with you. But just to be the devil's advocate, at least in the ICICI Bank case, ICICI Bank had less than 10% exposure in that consortium. It was an old loan, like they've said, if it was given in 2012. The question is, and like Jagannathan has written today, R. Jagannathan in Swarajya magazine, that it is not just competence of these two CEOs, and Professor Ram Mohan, this question is really coming your way. It also has to do with how the bad news is actually coming in at a time and coinciding with a very bad time for the government and the regulator on the banking front. And perhaps that needs to be read in as well. Wouldn't you agree? This isn't just bad performance by the two ladies or specifically at ICICI Bank. It's all also coming in at a time when questions have been raised on the regulator and the government. Professor Ram Mohan.
Well, there's no dearth of conspiracy theories in these situations, and I'm aware of the thesis that these two issues have been highlighted in order to deflect attention from the situation of public sector banks or even the larger problem of government and so on. But I think leaving aside those questions or issues, I think it's important to look at both these, the situations in both these banks strictly on merit. And I think one of the themes that is common to both these banks, these private banks, and that cannot be wished away is the role and effectiveness of the board. In the case of ICICI Bank, whether the bank responded adequately and correctly to the various allegations that have surfaced, whether it was right in summarily giving a clean chit without conducting proper investigations, that is the issue. In the case of Axis Bank, on what basis or with reference to what criteria did the board choose to give a 4th term to the CEO, the incumbent, and how is it that it quickly retracted its position when the RBI confronted it with reasons why the term should not be extended? So I think the issue of the effectiveness of boards in both these situations and the overall question of corporate governance is simply something that cannot be wished away. And if the argument has been made all along that public sector banks should be privatized because somehow corporate governance is superior in private banks, I think what has come to light in the case of both these banks certainly puts a question mark around that.
No, and I have an entire piece where we will dedicate and talk about the role of boards and the role of independent directors and how despite all the governance norms, none of that has really changed. But I'll take it across to Swaminathan Iyer, who's joining us right here. And Swami, the board was perhaps wrong in giving a clean chit to its CEO with just an internal inquiry. Perhaps an external inquiry was warranted, but one doesn't make a difference now because there's already a CBI probe. The question that many people are asking now is the board perhaps wrong? Is the board perhaps misled in letting Ms. Kochhar continue as its chief? Because you've got large stakeholders, you've got ratings agencies, you've got brokerages now talking about a possible class action lawsuit, you've got ratings agencies saying there could be a reputational damage. What should the role of the board be at this stage? They've made a mistake perhaps, yes, by bringing in a rush to give a clean chit, but what now?
You know, at this point of time, it's very difficult to say whether in fact there was something that seriously went wrong. I mean, I understand that there is a lot of questions that have to be asked. At this particular point, it is not yet clear to me that while certainly there are issues that have been raised, and if the investigations prove that Chanda Kochhar's actions have crossed a particular red line, then certainly she should go. At this particular point of time, I would simply say that the independent directors certainly showed a lack of interest in what was going on, and there is a question as to how independent are the independent directors. I think it could equally be said that all the shareholders, all the large institutional shareholders, what were they doing? Is it just that they didn't know, or did they not go into it further? I would agree with T.T. Ramohan that this particular issue shows that simply privatizing the public sector banks will not solve all their problems. At the same time, I think it's worth pointing out that whatever we are talking about, the woes of ICICI Bank or Axis Bank, it is nothing like the woes of Punjab National Bank or some of the other public sector banks which have become PCA backed. So, I would say that we need a huge amount of introspection to improve governing standards in the private sector banks, and that is demonstrated by two private sector banks with a very good reputation so far. Nevertheless, I think I would emphasize that the standards in the private sector banks still seem to me to be distinctly better than in the public sector.
Okay, so your vote is still with the private sector bank being distinctly better. But Professor Meghnad Desai, if I may come to you, there has been some kind of communication that has happened between the regulator, that's RBI, and ICICI Bank Board. In its very first statement, it was stated that questions were sought as the regulator and answers have been given. Now, the regulator hasn't come on record to make any of those answers public, and which is also one of the reasons why perhaps RBI has attracted a lot of flack. But what about the ICICI Bank Board itself? The bank is under pressure, people are raising questions, ratings agencies are talking about it, brokerages are saying things. Is it also not incumbent perhaps on the ICICI Bank Board to make that communication public? What sort of details were asked for? What sort of answers have been given? In the high spirit of transparency, should the board not do that instead of saying this is privileged conversation?
No, I think first of all, let us say that if what is alleged is true, Chanda Kochhar should have gone public and said, my private interest was involved, I had a conflict of interest, I should have recused myself, I did not, therefore I will resign. And that would be the proper conduct of a responsible banker. I mean, we can blame boards and we can blame regulators and so on. But this is the issue. Now, obviously, the board will say, well, once the case was with the CBI, this and that, it became complicated for us to do anything. But I also think that shareholder activity is also needed to keep the regulators on the toe. You really have to look after your own money if you've invested in a bank. And you have to insist that the bank to whom you have invested money in behaves in a proper professional way. And again, I have to say, this is not to make a parallel with the public sector banks. That is a question of the quality of management. The quality of management is abysmal, and it has been for many years, and the non-performing assets losses are mounting every day. And let's keep this separate, because I don't want some mealy-mouthed defense of public sector banks by saying, oh, the private sector banks are bad as well. Let us not get into that. Because again, as people have already said, in the Shikha Sharma case, it is not even clear whether the only thing the regulator didn't like was this automatic renewal for a 4th term. And that issue has been settled because she has offered to go away. So I think we have to focus on, in the private sector bank case, first of all, on the CEO herself, and then on the board, and then on the shareholders. Because, and I also have to think, say that the regulator's behavior has to be much more public and much more under scrutiny than it has been so far.
Absolutely. Yes, yes. I think many questions have been raised on that front. That is the RBI not communicating enough. Its job just can't be price stability and forex management. Its job also is to communicate and to clarify and to end uncertainty, because it is the supervisory, it does the supervisory role. It's a regulator nonetheless. But I will take it across to Pradeep Chaudhary. And Mr. Chaudhary, since you had experience with the public sector bank, one is curious to ask questions that, yes, many questions have been raised on the regulator, but what about the role of the government? The government holds stake in Axis Bank, and the government has a director, nominee director on the board of ICICI Bank, and even then the government's nominee director doesn't attend the board meeting. LIC refuses to say a word. They skip the meeting as well, despite the fact they own almost 10% stake in ICICI. I mean, is the government pretending that by being an ostrich, burying its head in the sand, the crisis is going to go away? Because there is a crisis. Denying it is not going to solve it. Mr. Chaudhary?
No, is the government required to be the conscience keeper? See, LIC nominees there, LIC has only about 5 or 10% holding, and the LIC nominee comes for the board meeting in addition to his regular duties at work. How much time is he able to give to this? And he acts on the basis, he or she acts on the basis of the information made available. So I think it is unfair to hang the board on this, because board meets at what frequency? Board meets once in 15 days or maybe once in a month, and they get to review the information as is presented to them. They don't have at their back this thing, some investigative agency. They don't have superior wisdom. They don't have the ability to see through all the events. So they take decisions based on what they see and what is made available to them. So, but I think the greater responsibility would lie with the executive directors. But given the hierarchy that is there, no executive director would consider it prudent to cross the path of the chief. So that being the case, there it rests. But public sector banks and private sector banks operate in totally different atmosphere. In public sector bank, there is always a chief vigilance officer. And in SBI, there are 14 chief vigilance officer, and anybody comes across any information can shoot out a postcard to the chief vigilance officer. So there are so many mechanisms of oversight. Sometimes it may, impinge or curb entrepreneurship or innovation, but these kind of forums are not available in private sector banks. Whether they need to, I don't know. But I think the regulator, and ICICI Bank particularly, is a systemically important bank, and next to SBI, it has the largest network and operations abroad. So therefore, in order to keep the image of Indian banking intact, it is necessary for Reserve Bank of India to have stepped in and to have seen that in such circumstances what the regulators' best practices are. But I don't know. This information has not been made available in public. I don't know whether any activity in this regard has been done.
Okay, I'm going to take up that point in just a bit, but Professor T.T.R. Mohan, I will ask you this question. While Mr. Chaudhary says, you know, the LIC nominee is perhaps discharging a lot of his other duties, he's perhaps only acting at the behest of the information he's getting on the board of ICICI. I mean, why hold almost 9.6% stake in ICICI when you are not going to lead from the front? I mean, there are people who've said that LIC, which is owned 100% by the government, should be leading from the front on ICICI Bank's board. What does the LIC do? Skip the meeting altogether. The LIC is absolutely quiet, absolutely stoic. In private conversations, they want conversations happening on governance. What are we talking about? And LIC should be the last one talking about governance norms. They bail out one public offer after the other. So I'm just trying to understand the role of the government vis-a-vis, and also the role of government-owned LIC in this entire controversy. They should ideally be the guys leading from the front, you know, steering the board perhaps in the right direction. That's not happening.
Well, I think these are valid questions to ask. And my point would be that if you have a presence on the board, whether it's LIC or government, I think you have an obligation to contribute. I don't think you can sit as a director on the board and just be a mute spectator to what is going on. You may not be you may not be able to take decisions or force decisions on your own, but it's certainly your obligation as a representative of LIC or government to make your contribution. But let me make a broader point, which I think has not received sufficient attention in this entire debate on privatization and so on. It seems to me that people have not thought through the details of privatization adequately. So one of the things to understand about the Indian context is that we have still not developed a culture of professionally managed boards which are accountable to large institutional investors. In fact, you can count on your fingers the number of leading companies which can be said to be professionally managed, maybe L&T and ITC among the non-financial companies, and ICICI Bank, HDFC Bank and Axis Bank among the large banks. There must be just about 10 such entities, but for the most part, we have a dominant investor or promoter who calls the shots. And in the PSUs, it is the government, and in the private sector, it is an industrial house or businessman or industrialist. So where these two entities are absent, whether adequate checks and balances exist on professional management is a question that has not been thought through, and that is a question that is coming to the surface in the case of both ICICI Bank and Axis Bank. So perhaps in the early stages when they were relatively small, it didn't matter, but now that they are both very large entities, I think the absence of checks and balances is manifesting itself, and without thinking through this issue of how exactly corporate governance is going to be managed in the absence of a dominant investor or promoter, I don't think we should be rushing into privatization or getting into those questions at all.
No, yeah, absolutely. But I think now that you've touched upon the board issue, I was planning to go to it later, but let's take it head on right now. And Swami, I'm going to come to you. This entire controversy has raised, whether it's ICICI Bank or Axis Bank, it has raised questions on the way boards of Indian companies work. They are either subservient to the promoter or to the CEO, and the role of independent directors. I mean, a slew of reforms, a slew of governance initiatives, and they continue to be these silent spectators to whatever's happening in the company, to whatever's happening in the boards. Are we being too harsh, or is this actually the reality that's perhaps being reflected in instances that have come to light and are in headlines for the wrong reasons? Swami?
No, I think the reality is what Ramon has pointed out. The reality is that in the private sector, there is more or less one guy who calls all the shots. The idea of independent directors actually being able to do a detailed scrutiny and hold the promoter to account. Basically, it's not there at all. So I think that point is well taken. And Indian capitalism needs to mature. We are right now at a very immature stage. We are nowhere near the stage where you have really good board managed companies. Having said that, I think one of the points to be made is that the RBI so far has resisted the temptation of giving banking licenses to industrial houses. In my view, this drives home further the point. Industrial houses should not get banking licenses. It is better that anybody who gets a private sector banking license should have that much distance away from industry. So if Mukesh Ambani wants a bank license or Kumar Birla wants a bank license, I think the RBI should say no. We need to have these separate boards. We need to have separate financial companies unconnected to industry. Now you may say that even in their case, ICICI and Axis Bank are following exactly what the pattern I'm suggesting. I'm saying yes, because at the end of it all, when I see what has gone wrong in these banks and what has gone wrong in some of the other banks, I would still say that we need to improve governance. We are a long way from having good governance standards. And in pursuit of that, I would say that the RBI should avoid giving any bank licenses to an industrial house.
Yeah, they've resisted the temptation for far too long, and like our experts are pointing out there, we wish the temptation is resisted for a long time to come before India does mature into an economy which can afford that. But T.T. Ramohan, before I go across to the others, I must ask you this question. Talking about the role of, the role of the board, role of directors is one thing. Following it in letter and spirit is another. Now, Shikha Sharma's tenure, yes, has been reduced, but is it not a question of impropriety that she nonetheless gets 7 months? What did the RBI red flag? The RBI red flagged her continuation as the CEO, and that in spirit defies what the RBI had red flagged. So that's question number one. The contra question to that is RBI, like a lot of experts, Jagannathan for instance, are pointing out there in Swaraj magazine, that is RBI also trying to make a case out of a weak bank? It was found wanting in PNB, it was found wanting in ICICI Bank. Here it finds a weak candidate to make an example out of, especially 10 days after it has said that we've got greater control on private sector banks than on public ones and all of that.
Well, I don't think we should be imputing motives to RBI. I think there's a general perception that the intervention in the case of Axis Bank was warranted, because if you're going to give a fourth term to a CEO, then certainly I think there's an expectation that you should be backed by outstanding performance. And if that was not the case, and RBI seems to have made its case by giving its reasons for why Mrs. Shikha Sharma should not be given a fourth term, I think they have made that case, and the board has not been able to refute it. So given that, I think the intervention was entirely appropriate. Now, the board's decision to let Shikha Sharma stay on for 7 months is another matter, and it seems to have been driven by another board failure, which is the absence of an adequate succession plan. So, what we are seeing in the case of Axis Bank is apparently two failures. One is the adequate monitoring of CEO performance and responding to that, and the other is putting in place a succession plan. And if in these two elements a large private sector bank is found wanting, again, you really have to ask what is the quality of corporate governance that we must expect of the private sector in banking.
Right. Okay, I want to ask Pradeep Chaudhary this question, sir. And while enough has been written, more headlines have been made of what the shareholders want, what the institutional investors are saying, what the brokerages are saying, what the ratings agencies are saying. Where does the onus lie on protecting the depositors' rights? I mean, in banks, shareholders have a right, yes, but there is also a right that depositors have. Where does the onus lie on protecting that right? Mr. Chaudhary?
Yeah. No, I think if you start talking about every single depositor, it doesn't work. Now, similar is the right of what are the rights of creditors to a company in case of a bankruptcy or in other case. So long as there is no default in their payments, I don't think they have a reason to complain. Now, has any depositor been denied the withdrawal of his deposit? No. So therefore, I don't know why this issue is being dug up from nowhere. In fact, for example, let us not forget the large scale financial institution came to grief. I am referring to Unit Trust of India, which had atrocious investment policies. They went and invested in stocks and assured fixed returns to the investor, and the disaster was waiting to happen. Now, if SBI chairman and LIC chairman who attend a board meeting once in 3 months, are they to fix this thing? And why is nobody questioning the auditors? In fact, auditors are to be supervised and they are the eyes and ears of Reserve Bank of India. So, why don't the auditors called upon to explain, and auditors always meet the audit committee, so they should come and comment whether there is a problem in the credit sanction process or in the credit delivery process. Similarly, about the leakage of the results. So, why don't the auditors ask that what did you do or what did you see? So, somebody who attends a meeting once in 15 days, in fact, Mr. Ram Mohan was on the board of SBI Pension Fund, but I don't think he even had an opportunity to meet any single officer apart from the CEO in the board meeting. So, he would not possibly be aware of the detail going on in this company. So, therefore, I think it is important to ask the executive directors about this. And finally, I think it is the culture of the organization which develops, and culture leads to the value system in the executives, in the senior executives, which gets percolated down to the lower employees. So, when the value system is strong, when the culture strictly discourages such kind of practice, then I think such incidents would be much less.
Indeed. A final question, and Professor Desai, just to ask you this question, and you're going to give us the global insider's view also on this. Do you think the law in India is extremely lenient towards white collar crime? I mean, we haven't seen that's the question. Is the law too lenient? Take the case of Rajat Gupta. The man is still paying for what he did on Wall Street. We don't have a similar parallel here in India. So is the law too lenient, or is Indian society far too tolerant of white collar crime?
No, I think both things are true. I would say only America has got the tough enough laws to put bankers in jail, because traditionally in American culture they suspect bankers to be fraudsters. It's a long tradition in America, whereas in UK and much of Europe they're far too lenient. Nobody has gone to jail for the 2008 financial crash in UK, and many people should have gone to jail. Now, I think in India there is far too much deference. White collar workers, but even within a board, the CEO is deferred to all the time. So Chanda Kochhar gets off without a proper investigation by her board, because she is the boss and therefore everybody kowtows. And same thing was happening in the Shikha Sharma case, and thank God the Reserve Bank of India put a stop to it. But you're quite right. These kind of, if a person out on the street, ordinary person, was going to cheat even to 1/1000th of the amount, he would be in jail. But bankers get away with it. And I think auditing is weak, governance is weak, regulators are weak, and the government doesn't actually want to do anything which would be too controversial.
Indeed.
So there we are.
It's in fact unfortunate that Indian banking space has found itself in these wrong headlines, whether it's public and private. But this has been a fascinating discussion. We're trying to identify the problems here that exist in both public and private sector banking, and hopefully find solutions that will address this mess. It works to nobody's advantage if banks go under. It also works to nobody's advantage if conspiracies cloud India's banking space. They're the big lenders. They will ensure economic activity takes off. We just want a cleaner bank system, and which is why the big bank cleanup debate. Thank you very, very much, Swaminathan Iyer, Lord Meghnad Desai, Pradeep Chaudhary and T.T. Ram Mohan for being with us. We really appreciate you taking time out. Don't go anywhere, because coming up next right here on ET Now is Top 10 at 10 with Tanya Bharadwaj.